Hey guys, welcome back to the channel. I'm your host Sharwan and you are watching Ind AS by Sharwan. So today's video is about the Ind AS 101, which is the first time adoption of the Indian accounting standard. So this standard is also very important because you know that all the companies in which the Ind AS is going to be applicable have to adopt this Ind AS, and this is quite, you can say, complicated standard and a lot of disclosure is also there. So we will divide the whole video into 4 different segments. In the first segment we will discuss about the basic idea, like what this Ind AS is all about, and then in the second segment we will discuss about the comparative periods, so like how many balance sheet, profit and loss account, cash flow statement you have to prepare in order to comply with the Ind AS 101. And then we will discuss about some exception and exemption which is provided under this Ind AS, like some Ind AS is saying you something, but this Ind AS is also saying you like don't comply with the requirement of those Ind AS because there is an exception or exemption provided into this Ind AS. And then we will discuss about the disclosure, like how the companies is disclosing about the Ind AS 101 into their balance sheet or financial statement. So I will also give you the real live example of some of the companies, how they are making the disclosure into their balance sheet for the first time adoption of financial statement Ind AS. So we will discuss. The video is quite long, but please watch the video till the end because it's worth watching the full video. Alright guys, so without wasting any time, let's start the video. Alright guys, so this is the first segment in which we will discuss about the basics of Ind AS 101, which is the first time adoption of the Indian accounting standard. So basically there is a lot of things in which we can cover the basics, like objective, scopes and other things, but I will jump right into the main segment because otherwise the video would be too long and the objective and scope is not much relevant to you guys. So this is the first segment which is very important. So this standard is all about from this paragraph. So paragraph number 6 says that an entity shall prepare and present an opening Ind AS balance sheet at the date of transition to Ind AS. This is the starting point for its accounting in accordance with the Ind AS. So it says like an entity shall prepare and present an opening Ind AS balance sheet at the date of transition to Ind AS. So company have to prepare the balance sheet at the date of transition to Ind AS, and this is the first starting point for its accounting in accordance with the Ind AS. So it's like the wording is like opening Ind AS balance sheet is in the italic. So opening Ind AS balance sheet has the meaning which is given in appendix number A. So appendix A gives the definition which is says like opening Ind AS balance sheet means an entity's balance sheet at the date of transition to Ind AS. So basically, like for example, Ind AS is applicable in India from 1st April 2017. So the company who will prepare the balance sheet as per Ind AS as at 31st March 2018. So for those company, the opening Ind AS balance sheet would be 1st April 2017. Remember that 1st April 2017 will be the date of transition to Ind AS. So therefore opening Ind AS balance sheet would be 1st April 2017 for the company which is adopting the Ind AS from 1st April 2017. But a lot of public company which is listed in India has already adopted it from 1st April 2016, not from 1st April 2017. So I will show you a lot of public sectors company for disclosure purposes. But in our example, like for this example, we are supposing the company will adopt the Ind AS with effect from 1st April 2017. Therefore the opening Ind AS balance sheet would be like 1st April 2017. Back to the standard. So this standard says like entity shall prepare and present opening Ind AS balance sheet at the date of transition to Ind AS, and paragraph number 7 says an entity shall use the same accounting policy in its opening Ind AS balance sheet and throughout all period presented in its first Ind AS financial statement. So accounting policy should be same in the Ind AS balance sheet, and once you adopt it, then it should be like used throughout all periods presented in its first Ind AS financial statement. those accounting policy which the company has adopted shall comply with each Ind AS effected at the end of its first Ind AS reporting period. So the accounting policy shall comply with all the Ind AS which is effective at the date of its first Ind AS reporting period. So like those Ind AS which is applicable as on 31st March 2018. So all those Ind AS should be complied with at the moment, but except as specified in paragraph 13 to 19 and appendices B to E. But there is certain exemption and exception which is prescribed in paragraph number 13 to 19 and appendix B to E, in which this Ind AS 101 says you that all right, the Ind AS says you something, but in this paragraphs 13 to 19 and appendices B to E, this Ind AS give you some exemption and exception. So we will discuss is about exemption and exception later in the video. So just remember this: accounting policy should be consistent and should be applied to all the period presented in its first Ind AS financial statement, and all the Ind AS which is effective at the end of its first Ind AS reporting period should be complied with. So this is very important point. And then next important paragraph is paragraph number 10, which is about the basics. It says like, except as described in paragraph 13 to 19 and appendices B to E, same paragraph and appendices, except those one, an entity shall in its opening Ind AS balance sheet. So except those paragraphs, like whatever mentioned in those paragraphs and appendices, the entity shall in its opening Ind AS balance sheet A, recognize all assets and liabilities whose recognition is required by Ind AS, not recognize items as assets or liability if Ind AS do not permit such recognition, reclassify item that it recognized in accordance with previous GAAP as one type of asset, liability or component of equity, but are a different type of asset, liability or component of equity in accordance with Ind AS, and apply Ind AS in measuring all recognized assets and liability. So it's saying like, whenever you apply the Ind AS, so in its opening Ind AS balance sheet, which is like 1st April 2017 in our example, you should recognize all assets and liabilities, not recognize assets and liability which is not permitted to recognize as per Ind AS, reclassify item to one type of asset, liability or component of equity which this Ind AS says you, and apply the Ind AS in measuring all recognized asset and liability. But now what is the example of those? So this is example like A, recognize all asset and liability who recognition is required by Ind AS. Like you know that deferred tax is to be made now on revalued assets, so therefore you have to recognize the deferred tax asset or liability on the revalued assets. Then like provisions now required as per Ind AS, but those provision was not earlier required by the previous GAAP, so therefore this is example of recognition of all asset and liability. Now livestock, you know livestock is also required to be recognized into the balance sheet. Then recognize derivative financial asset or financial liability, but in the previous GAAP that might not be need to be recorded into the books of account, but now as per Ind AS you have to recognize the derivative asset or liability into your books of account. Then clause number B is not recognize item as assets or liability if Ind AS do not permit such recognition. So don't recognize asset or liability if Ind AS says you that do not recognize it. So what will be the example? Like proposed dividend is no more the liability component, but earlier as per previous GAAP this proposed dividend need to be reported into the balance sheet. Then certain provision which might not be no longer required as per the Ind AS, so don't make the provision on it. Then certain intangible asset which need to be de-recognized as per the Ind AS, so you have to now de-recognize it. Then C, reclassify item, example would be like investment in equity share at fair value through profit or loss account or fair value through other comprehensive income as per Ind AS 109. So we have to now reclassify those type of investment into fair value through profit or loss or fair value through other comprehensive income. And you also know that loan receivable will be carried at the amortized cost and using the effective interest method, but earlier the loan receivable was measured at just the transaction cost. And then the example of measuring all recognized assets and liability as per Ind AS, like discounting of receivable, you know that you have to discount the receivable, discounting of long-term provision, and then fixed assets at fair value if you opt for the option. So you have to measure all these things as per the Ind AS. So this paragraph number 10 is saying you at the time of preparing the opening Ind AS balance sheet, you have to recognize all asset, not recognize asset which Ind AS says you to do not recognize it, reclassify item, and then measure all recognized asset and liability as per Ind AS, but except as described in paragraph number this and appendices B to E. So there is certain exemption or exception, like Ind AS says you that recognize that asset, but that paragraph number 13 to 19 or appendices B to E says you something different. So this is the exemption and exception. We will discuss it later on. So this is basically the first part, which is like the basics of Ind AS 109. Alright guys, so this is the second most important segment, which is the comparative information. So when you are applying the Ind AS 101 first time adoption, so comparative information is also very important, like how many balance sheet you have to prepare, and you know that the date of applying the Ind AS is very much known to you guys in the previous clip. So this is about the comparative statement or comparative income information. So paragraph number 21 is very important for the comparative purpose. So 21 has the two options, clause number A and clause number B. So the language is quite complicated, you can say, but let me tell you, explain you by way of example that how many balance sheet you have to prepare, and then I will also show you the live example, like the companies which are big companies, really listed companies, has already applied the Ind AS from 1st April 2016. So therefore we have one companies and we have the corresponding comparative figures also. So first of all, this is example like option number A and option number B, which is given to you into clause number, like paragraph number 21, clause number A and B. So what is those option? So option number A says you like prepare the balance sheet as on 31st March 2017 as per the Ind AS. Now in this example, I am supposing that the company has already applied the Ind AS from 1st April 2016, because in our live example, those companies have already applied the Ind AS from 1st April 2016. So therefore, if you have applied the Ind AS from 1st April 2016, then the option A says you like prepare the balance sheet as on 31st March 2017 as per the Ind AS, which is very obvious, and then prepare the balance sheet as on 1st April 2016, which is the date of transaction, as per the Ind AS obviously. So this is called the opening Ind AS balance sheet. And then prepare the statement of profit and loss for the period ended 31st March 2017 as per Ind AS. Then prepare the cash flow statement for the year ended 31st March 2017 as per the Ind AS, and then reclassify your previous year's balance sheet profit or loss or cash flow figures as per the previous GAAP. So in this you have to just reclassify, not applying the Ind AS into the previous year financial statement. Like for 31st March 2016, you have to just reclassify the previous year figures into those Ind AS figures. So like two balance sheets is there as per the Ind AS. First one is 31st March 2017, and then 1st April 2016, which is the date of transition into the Ind AS, and then one profit and loss, one cash flow statement, and then reclassifying previous year figure as per the previous GAAP. So this is the first option. And then you have another option like prepare the balance sheet as on 31st March 2017 as per Ind AS, then prepare the balance sheet as on 31st March 2016, which is the comparative figure as per also Ind AS on memorandum basis. So option number A says you like reclassify the previous year figure and don't apply the Ind AS into the previous year. But option number 2 says you can also apply the Ind AS into the previous year figures on the memorandum basis. If you are opting for this option, which is option number B, then you have to prepare like opening Ind AS balance sheet as on 1st April 2015, not 1st April 2016. So if you are applying Ind AS into the previous year figure also, so you have to prepare the opening Ind AS balance sheet as on 1st April 2015, and then statement of profit and loss and cash flow for the year ended 31st March 2016 and obvious 2017 as per the Ind AS. So this is like live example of SL Propack company is there. So like in this cases, like this company is preparing the balance sheet as at 31st March 2017 and then as at 31st March 2016, and then opening Ind AS balance sheet is 1st April 2015. So this is like the transition date. In this cases, like the company has already applied the Ind AS from 1st April 2016, but the company has also like applied the Ind AS into 31st March 2016 also. So therefore the company is now preparing the opening Ind AS balance sheet as on 1st April 2015. So all the listed companies which prepare the balance sheet as on 31st March 2017 has done the same thing, like opening Ind AS balance sheet of those companies 1st April 2015 instead of 1st April 2016. So this is the language. Like option number A, the first Ind AS financial statement include only 2 balance sheet. First one, like 1 statement of profit and loss and 1 cash flow. So like only 2 balance sheet is there, and then 1 statement of profit and loss, 1 statement of cash flow and related notes as per the Ind AS. So 2 balance sheet means like this one, 31st March 2017 and 1st April 2016. So you can see also the example here, like for example this is clearly mentioned, and then the reclassified previous year financial statement as per the previous GAAP. So therefore 2 balance sheet, 1 statement of P&L and 1 statement of cash flow as per the Ind AS, like 2 balance sheet as per Ind AS, 1 P&L as per Ind AS, 1 statement of cash flow as per Ind AS, and then reclassified previous year figure as per the previous GAAP. So this is like the whole list. Balance sheet as on 2 balance sheet, first one 31st March 2017 and then 1st April 2016, 1 statement of P&L, 1 statement cash flow as per Ind AS, and then the reclassified previous year figures as per the previous GAAP. Now second option, what it says, in addition to A above, like whatever the A is saying to you, voluntarily provide the previous year's comparative corresponding to first Ind AS financial statement also under Ind AS on memorandum basis. So I say like previous year's comparative is corresponding to the first Ind AS financial statement also under Ind AS on memorandum basis. So if you are doing this like previous year's figures, you are applying Ind AS also on the previous year figure, then the deemed date of transition will be as at the beginning of the comparative period. The beginning of the comparative years means like comparative year is 1st April 2015 to 31st March 2016. So the deemed date of transition would be 1st April 2015. So this one is saying you like this, and then you have the example also. The quick hill pop-up is there also. So this is example, like you can check it out. I will not feed the example for you, but this is saying you just like this, which I have covered in this. So assuming 1st April 2016 is your date of transition, so 2 options is there. Almost every company is applying the option number B, which is like applying Ind AS on both the financial statement like this year and then the previous year, and then assuming the deemed opening Ind AS balance sheet as on 1st April 2015. So all the companies almost doing the same thing, which like this one 1st April 2015 is their opening Ind AS balance sheet date. So this is the second segment in which we discuss about the comparative figure of Ind AS 101. Alright, so now the next and most important thing is like the exemption and exception. So paragraph number 12 is majorly covered with this, And the paragraph number 12 says like, this Ind AS, this Indian Accounting Standard, establishes two categories of exception to the principle that an entity's opening Ind AS balance sheet shall comply with each Ind AS. So obviously each balance sheet should be comply with each Ind AS, but there is certain exemption and exception which is provided into this major category. So except those two category, the company has to apply Ind AS in the opening Ind AS balance sheet. So what is the exemption and exception? So category number A and category number B, we will divide it and explain it category wise. So first category is like paragraph number 14 to 17 and appendix B prohibit retrospective application of some aspect of other Ind AS. So like some aspect of other Ind AS says you like you have to apply those Ind AS, and for complying with this those Ind AS's, you have to apply those into retrospective effectively. So but this Ind AS, like paragraph number 14 to 17 and appendices B says you that you don't need to do the retrospective application into those requirements. So like paragraph number 14 to 17 and appendices B, let's check out what those paragraph says. So 14 to 17, like it says about the estimates. So paragraph number 14 says like, an entity's estimate in accordance with the Ind AS as at the date of transition to Ind AS shall be consistent with the estimate made for the same date in accordance with the previous GAAP. So whatever estimate was as per the previous GAAP, those estimates should be consistent, and those estimates should be also contained into the Ind AS unless there is objective evidence that those estimates were in error. So whatever estimate was earlier as per the previous GAAP should be consistent with the estimate which you will apply into this Ind AS. So therefore you cannot change the estimate. There should be like consistent estimate should be there as per the previous GAAP. And paragraph number 16 also says you, an entity may need to make estimate in accordance with Ind AS at the date of transition to Ind AS that were not required at that date under previous GAAP. So there can be a situation in which you don't need to require any estimate as per the previous GAAP, but now you have to make estimate as per the Ind AS. So to achieve the consistency with Ind AS 10, which is like accounting estimate, so those estimate in accordance with Ind AS shall reflect the condition that existed at the date of transition to Ind AS. So because earlier, like previous GAAP don't say you to make any estimate in respect of something, but now Ind AS saying you have to make estimate. So while making the estimate in regard to those cases, those estimates should reflect the condition that existed at the date of transition to Ind AS. So like whatever condition will be there as on 1st April 2016, so those conditions should be reflected while making the estimate in respect of a cases in which you were not earlier required to make any estimate as per the previous GAAP. And there is also appendix B, which like retrospective application, and it is in page number 19. So what it says like, exception to the retrospective application of other Ind ASs. So there are three category also into this appendix, like derecognition of financial asset and financial liability, paragraph number B2 and B3. You can check out other. So B2 says you, except as permitted by paragraph B3, a first time adopter shall apply the derecognition requirement in Ind AS 39. You can read it out as 109. Financial instrument recognition and measurement prospectively for transaction occurring on or after the date of transition to Ind AS. In other words, if a first time adopter derecognize non-derivative financial asset or non-derivative financial liability in accordance with previous GAAP as a result of transaction that occur before the date of transition to Ind AS, it shall not recognize those assets and liability in accordance with Ind AS. So like these three situation is there. So basically, like back to the page number 7. So estimate is there, and estimate should be consistent with what was there at the time or previous GAAP, and if there is no estimate required as per existing or previous GAAP, then you have to make estimate which reflect the condition existed at the date of transition to Ind AS. And appendix B give you the example of 3 cases like derecognition of financial asset liability. So this is the cases like category number 1. Let's take a look at the live example how the company is doing into these cases. So like mandatory exception applied, so like this one, mandatory exception applied. So A estimate, this is the real disclosure, like the company is giving you disclosure like an entity estimate in accordance with Ind AS as at the date of transition to Ind AS shall be consistent with the estimate made for the same date in accordance with previous GAAP unless there is objective evidence that those estimates were in error. Ind AS estimate as at 1st April 2015 are inconsistent with the estimate as at the date made in conformity with the previous GAAP, except where Ind AS required a different basis for estimate as compared to previous GAAP. And like in case of endurance also, this is another company is saying you like exception to retrospective application. So this company is saying the company has elected to applying changes in estimate prospectively from the date of transition to Ind AS in respect of allowance for doubtful debt and productive warranty. So because earlier there was no such like Ind AS don't say you anything about this aspect, so therefore the company has elected to apply changes in estimate prospectively from the date of transition to Ind AS in respect of allowance for this thing. So this company is saying you like this. So therefore this clause is regarding estimate and the company is doing like this. And then derecognition of financial asset and liability, this clause is also there, like the company has applied the derecognition provision of Ind AS prospectively from the date of transition to Ind AS. So this is also exception. And then like classification and measurement, Ind AS 109 require an entity to assess classification and measurement of financial asset, which is like investment and debt instrument, on the basis of fact and circumstances that exist at the date of transition to Ind AS. Because earlier like classification and measurement principle of financial asset was not there, but now Ind AS is applicable. So whatever will be the fact and circumstances exist on the date of transition, the company has applied those fact and circumstances for the classification and measurement of financial asset. And then paragraph like D is also there, government loans, which you can read out. The link of that SL Propac balance sheet is in the description. You can check it out to make familiar with those kind of a disclosure. And then category number B, like exception and exemption. So it says like appendices C to E grant exemption from some requirement of other Ind ASs. So appendix C to E grant you some exemption from some requirement of other Ind ASs. Like Ind AS says you something like for property, plant and equipment, the Ind AS says you like you have to measure property, plant and equipment at that cost, but appendices C to E give you some kind of a exemption to those requirements because of the first time adoption. So like appendices C to E. So first check out the appendices C, which is on the page number 22. Like exemption for business combination, which if you will read it out, then you can find that what exemption is there. Business combination is mostly not applicable on most of the cases, so therefore I'm not telling you about this. Then appendix B give you the exemption on a lot of things. So like deemed cost is the most important cases, and almost every single company will have to face this. So deemed cost is for property, plant and equipment. So like deemed cost, this give you exemption. Like a first time adopter may elect to present an item of property, plant and equipment at the date of transition to Ind AS at its fair value and use that fair value as a deemed cost at that time. So this Ind AS is saying like if you are applying the fair value as a deemed cost of property, plant and equipment, then that can be also your deemed cost. And then D7A is also giving you an option, like a first time adopter may elect to continue with the carrying value for all its property, plant and equipment as recognized in financial statement as the date of transition measure as per the previous GAAP. So whatever will be the carrying amount as per the previous GAAP, you can deem those carrying amount as the deemed cost as per the Ind AS. So this is like the live example how the company is doing, like optional exemption availed, like deemed cost. So Ind AS 101 permit a first time adopter to elect to continue with the carrying value for all its property, plant and equipment as recognized in the financial statement as at the date of transition to Ind AS measure as per the previous GAAP. We have just seen this and use that as its deemed cost as at the date of transition after making necessary adjustment for decommissioning liability. This exemption is also applicable for intangible asset covered by Ind AS 39. So accordingly, the company has elected to measure all its property, plant and equipment and intangible asset at their previously GAAP carrying value. So there are a lot of options available in Ind AS 109 appendix number C, like this is the option for fair value, then this is also the option D6, D7 and then D7A. So the company has opted for the same carrying value which was there under the previous GAAP. So this company has applied this. And then investment in subsidiary, also there are like exemption available. Lot of option is available in respect of investment in subsidiary, also like investment in subsidiary, you can check it out. But this company has accordingly the company has elected to measure all of its investment in subsidiary at their previous GAAP carrying value. Company has adopted this. So therefore, and then long-term foreign currency monitoring item, this is also like options available into appendix number D. So you can check it out. There will be some like option available in those category, and the company has adopted, like company has elected to continue the current accounting policy adopted for accounting of exchange difference arising from translation of long-term foreign currency monetary item. So same thing the company is applying. So 3 exemption company availed, and the company has disclosed it into the financial statement like this. So therefore this is the exemption and exception which is provided under like paragraph number 14 to 17, then appendix number B, and then exemption is also there as per appendix C to E. So therefore, like in this paragraph we learned that except as described in paragraph 13 to 19 and appendix B to E. So this is the exception. So we have also discussed about this thing. So company are making disclosure like this, like option, exempt, exemption availed, this type of thing, then mandatory exception availed. So you have to also do this type of thing like those companies doing. So link of this SL Propac balance sheet is in the description. You can check it out for more understanding. Alright guys, so this is the last segment and it is regarding the disclosure. So paragraph number 23 is important in regarding to disclosure. So it says like entity shall explain how the transition from previous GAAP to Ind AS affected its reporting balance sheet, financial performance and cash flow. So basically it is very important also that like how the Ind AS affect the financial results like balance sheet, profit and loss or the cash flow. So you have to explain how the transition from previous GAAP to Ind AS affected your financial statement. So paragraph number reconciliation, paragraph number 24 is also there. A lot of clauses there. Clause number D is relevant to you. It says like where however an entity decided to provide 1 year comparative information in accordance with paragraph 21B. 21B is like in cases where the previous year figure has also like applied Ind AS into previous year figures also. So clause paragraph 21B was the option number B in paragraph number 21. So in our example, like we have seen in the balance sheet of SL Propac that the company has already applied the Ind AS into the previous year balance sheet also. So therefore like in cases where you opt, like you have applied the Ind AS into previous year figure, then this clause will be applicable, and it says like then this Ind AS then instead of disclosure be above, such entity shall provide like reconciliation of these thing 1, 2, 3. So let me tell you by way of example like how it will work. So like you have to make the reconciliation as this, like balance sheet as per the Ind AS as on 1st April 2015 versus the balance sheet as per previous GAAP as on 1st April 2015. So reconciliation, you have to provide reconciliation between this one, balance sheet as per Ind AS as on 1st April 2015 versus the balance sheet as per the previous GAAP. Remember previous GAAP as on 1st April 2015. So therefore reconciliation will be as per previous GAAP versus as per Ind AS, and the date would be 1st April 2015. And then balance sheet as per Ind AS as on 31st March 2016 versus the balance sheet as per previous GAAP as on 31st March 2016. And then the total comprehensive income as per Ind AS on 31st March 2016 versus total comprehensive income as per previous GAAP as on 31st March 2016, and also about the cash flow statement. So this is the legal language, like a reconciliation of its equity. It's saying you like equity, but companies is making the disclosure about the balance sheet because you cannot simply reconcile between the equity unless you reconcile between the balance sheet. So companies in practical applying like reconciliation into balance sheet, then profit and loss, then cash flow, and then equity. 4th thing is there. Then reconciliation of its equity in accordance with Ind AS as a date of comparative period presented. So its equity reported in accordance with period. So you can check it out the language, but simply the thing is like this, which I have explained you. And the live example is we have of the endurance company. So this company is disclosing things like this, like reconciliation of equity as per previous reported under previous GAAP to Ind AS as on 1st April 2015. So like this, as per previous GAAP versus Ind AS as on 1st April 2015. So like previous GAAP figure was this, effect of transaction on this amount is this, and then the balance sheet as per Ind AS figure is this as on 1st April 2015. And the next one is like reconciliation of this equity, like balance sheet as on 31st March 2016, like previous year figure as per previous GAAP, effect of transaction to Ind AS, and then Ind AS balance as per the balance sheet. So like in our example we have discussed like 31st March 2016, and then the statement of P&L for the period 31st March 2016, previous GAAP figure, effect of transaction, then Ind AS figure, and then cash flow statement for 31st March 2016, then reconciliation of equity between 31st March 2016 and as on 1st April 2015. So because the wording in Ind AS is like reconciliation of equity, not a reconciliation of the balance sheet. So main thing is the equity, but because people cannot understand the equity unless they understand the balance sheet, so therefore companies are also making disclosure of balance sheet. But here like equity and both year 1st April 2015, 31st March 2016, then reconciliation of total comprehensive income. So because Ind AS says you to give the disclosure of reconciliation of total comprehensive income instead of profit or loss, so company is making the disclosure of profit or loss and also total comprehensive income. And then you can see like there's a notes number attached to each of those segments, like revenue from operation, previous year figure as per previous GAAP, effect of transition, and then Ind AS. So why this effect is there as per Ind AS? So note number like 7 explain you the reason why there is a difference. So if you check out the note number 7, revenue, then the explanation is this, like as per Ind AS, the amount of revenue arising on transaction is measured at the fair value of consideration received or receivable, taking into account the amount of any trade discount and volume rebate allowed by the entity. Accordingly, the company has netted off discount allowed to customer with revenue. So because the company has netted off discount allowed to customer with revenue, because of this there is a like effect of transition into Ind AS from previously GAAP to this thing. So amount netted off with the revenue for the year 31st March 2016 is 142 million, and same thing like 142 million like this. Because of netting off, the result of effect of transition to Ind AS is this one. So a lot of explanation is there in the notes below, like leasehold land, why there is a difference in leasehold land, why there is a difference in financial asset, why there is a difference of deferred tax borrowing provisions. Like under Indian GAAP, the company has accounted for previous provision, which is the warranty including long-term provision, at the undiscounted amount, but as per Ind AS 37 required with effect of time value of money is material, the company should be like present value of expenditure expected. So because of discounting, the effect is like this amount. So therefore, like you can check it out, the explanation why there is a difference of amount from previous GAAP to this app. So you can check it out. Link of this endurance balance sheet is also in the description. You can check it out. So this cover us all the important thing regarding the Ind AS 101, which is the first time adoption of Indian accounting standard. So that was the Ind AS 101. I hope that you like the video. The link of all the document like example, and then the balance sheet of endurance, SL Pro Pack, and then the Ind AS 101 is in the description column. You can check it out. You can download it from there, and there are going to be more such video into this channel. For this, just subscribe the channel and also turn on that notification column, because when you hit that notification button, so that will update you whenever I will upload a video into this channel. So I hope that you like the video. Please share this video to all your friends who are still wondering like how to comply with the requirement of Ind AS. If you have any query, you can ask me on the comment section. I may reply you by way of I will reply you. Okay, so this is the end. We will again going to meet into the next video. Till then, bye bye.